is also to ask for your permission to officially report our session today. Salaam?
Yes, my name is Salaam. I'm from Sikonge, Tabora. I am a land officer as well as a valuer.
Thank you.
Yeah.
Thank you very much. Thank you very much.
Okay.
So I've just shared the link to our our chat room for us to share with others, those who you can access. And then Diana, whenever you're ready, I'll just let you. That's the link, so you can send that to someone who is interested in joining. I've just shared that on our chat room. And just to confirm our sessions. Yes, Sultan Ahmad.
Naam, sawa, nashukuru. Tunatakiwa tuanze au bado tunasubiri watu wa join?
I think we are waiting for a few minutes so others can join. We are roughly 10 here.
Just a quick one. What should be the preferred language? Because I can do both. I can do Swanglish as well.
Yeah, I think let us use English, and if we need clarification, then we can add some Swahili in it. But I think English should be the mode.
Sawa. Okay. Let me start by introducing myself. My name is Ahmed Sultan. I'm a real estate agent. I'm based in Masaki. And my two areas of expertise is on property sales and joint ventures. So I'm not trained professionally as a real estate specialist, but most of the things I'll be discussing mainly come out of my personal experiences being involved in this industry. However, my major expertise as far as an individual is concerned, I've been a salesman almost my entire life. For the last over 20 years, I've been in sales, particularly on fast-moving consumer goods. But a few years ago, I decided to venture into real estate, and it's been quite interesting. I've seen quite some movements. So I'll be sharing mainly what I see on the ground, what I see and what I hear from the investors, what I hear from the landowners, and what I hear from my fellow real estate agents, and what the things I read from. So for me, it won't. I can't brag that I'm expert. I'm just an observer and a person who do this for a living on day-to-day basis. So first of all, let's look at the current housing trending in Tanzania. 2 years ago, for example, particularly, I'll be focusing, most of my examples are focused in Masaki because this is where I work on daily basis. So, but generally speaking, real estate, particularly in housing market, there was very serious stagnation. And we've only seen some tremendous growth in the last 2 years, meaning 2023 and particularly 2024. And this 2025, we see huge potentials. We expect some slowdowns in 2025 because it's an election year. I believe we all understand our current situation in this country and many other African countries. But nonetheless, we expect to see some tremendous growth. And according to some valuable data, it's believed that this year the housing market in Tanzania will jump to about $680 million. But we expect to see an estimated 7% growth on year-on-year basis in the next 5 years, which will go to very close to about $900 million. Now, if you compare the numbers that are expected in Tanzania this year, which we're talking about $680 million, China, which is the biggest, is the largest market as far as housing market is concerned. China this year is expected to generate about $115 trillion. So it comes to about our market is Chinese market is expected to be about 160 times bigger than Tanzania. Well, that translates to, in terms of course, the main issue is the income of the people, Chinese versus Tanzanian. So I won't go into that. There are several factors that are what we call the driving factors into this growth. So the 7% factors will come from three key areas. Number one is, of course, the growth of economy. BOT is expecting our economy to grow this year at about 6%, which is an increase because 2023 there was less than 5% of GDP growth. Last year there was about 5.6, so this year is expected about 6%. There's a possibility GDP could go higher, but those are the current numbers that BOT is giving us. Now, the second factor is the urbanization, the rate of urbanization. We know in Tanzania, just like many other countries in the world, there's a huge influx of people moving from the urban areas, from the rural areas to the urban areas. And currently, as of this year, it's believed about 40% of Tanzanians live in urban areas. We're talking cities. Mainly, the biggest of all is, of course, Dar es Salaam. And I saw somewhere one of the projections, Dar es Salaam, by the year 2100, Dar es Salaam is expected to be among the top 10 cities which are the most populous. Just think of the number. It sounds crazy. So if we think that Dar es Salaam is growing, this is what the World Bank is looking at, that Dar es Salaam will be among the 10 most populous cities, not in Africa, in the world. It's crazy number, but when looking at what is happening, I grew up in Dar es Salaam. Well, I can't dispute that. I cannot dispute that. So that's another issue that is driving the growth. Cities like Arusha is mainly the tourism and the mining. Places like Shinyanga and others, there are different factors, but Dar es Salaam, the key factor is there are two issues. Many people are moving from the rural areas coming to the urban areas because of opportunities. And of course, most expatriates who are flocking into this country prefer to reside in Dar es Salaam. I had a meeting a few months ago with one of the an Asian investor, a local guy who was born, and he's a very big investor here. He was telling me last year they were projecting, that was sometime last year, they were projecting Tanzania was to receive about 300,000 Chinese expatriates coming in. So the numbers are quite crazy if you listen to what is actually being said. Now, the third key factor that is contributing to this massive growth of Tanzanian housing market is the development of infrastructure. We see, for example, if you move within Dar es Salaam, you see the BRT, the rapid bus systems. Roads are being constructed everywhere. When I live in Kigamboni, and I've been living there for the last, I would say, 15 years now. When I moved in, there was barely roads in Kigamboni. Now there's a bridge. There's even a new road which is proposed to be constructed from Kibada all the way to Pemba Mnazi in the next 3-5 years. All these push into now more people looking into building in places they never thought of. When I was buying land in Kigamboni 15 years ago, most of the people I was working with, they laughed at me. They really laughed at me. I bought my plot, I think I bought about 3 million shillings. Today, my plot is worth over 300 million shillings. So the urbanization, the development of infrastructure, and of course the growth of the economy, all these are the three key factors. So I don't know if there's any question on this area before I proceed.
Excuse me, are you having some sort of presentation, or am I the one not seeing anything in the slide moving?
Well,
Yeah,
I'm presenting on the first topic, on the overview of the Tanzanian housing market. That's the area of my presentation. I'll move to the next subject. Yeah. I shared some notes, as I said earlier. I'm not technologically savvy, so Njavike, I think, must have shared something.
Yeah, yes, thank you, sir. Maybe I can clarify that. Thank you so much, Ahmed. Yeah, so we will. We wanted this to be more of a conversation, and that's why even Ahmed is also asking if you have any question. And after we will share this audio recording. So we don't have any slides, and we opted intentionally not to have any slides. So this could actually be a conversation. I hope that's okay, Kelvin.
It's okay. Thank you.
Okay, please carry on, Ahmed. Carry on.
All right, I'll just go quickly to the next subject because I would love that we have more interactive discussion, and then I'll share more insights on particularly, like I said, my area expertise is on sales, property sales, and joint ventures. So I'll move on to the next topic of joint ventures. Now, I'm not sure if many of you are familiar with the joint ventures. I'll discuss the joint venture. I will mainly talk about is individual to individual joint ventures, not company to company. You have an investor who comes in. Sometimes they come in as individual, but usually they represent a company. But most of the time, these investors will be trying to enter into joint venture with individual landowners who are usually, most of people who have these properties are usually elderly, or maybe it's a group of family members who've inherited a piece of land. Those are the main driving forces at the moment. We know about the joint ventures National Housing has, but as far as the most investors who are coming into development of housing properties, particularly in the peninsula area, are not interested into national housing. There are many factors, but I will not get into them, but I will discuss on these joint ventures that I've been working on, and I've seen other people who I work with in the joint ventures. So these will be the key areas of our discussion. Now, currently, majority, I would say over 95% of investors coming into Tanzania, I'm talking the Chinese, the main investors are Chinese, the Turkish, of course, the Indians, the local Indians, Asians who are here. I've seen also Arabs coming in from countries like Lebanon. I've seen Egyptians. I've seen Ethiopians. And currently, I've seen a new trend that is developing. Our neighbors, Kenyans, who are coming in, but most of these Kenyans who are coming in are Somali. You know, we know in Nairobi, for example, they're the very big developers in Kenya. So it shouldn't surprise us why it was Somali. These are the main developers in Nairobi. So these are the new boys in this business who are coming in, and but majority of these construction happening at the moment are dominated by the Chinese and local Asians who are most of them were born and raised in Tanzania. So now the main interest of these investors are on what we call lifetime ownership. They want to come in, talk to a landowner, they agree on a particular percentage of shareholding, and then each individual owns whatever percentage they have on lifetime ownership. There's almost zero interest on what we call build, operate, and transfer. If there's any question on the difference of those two, I will happily clarify. I don't know if everyone is familiar with those two terms: lifetime ownership and build, operate, and transfer. Is there anyone who wants me to clarify?
Yes, please. If you can please clarify to be on the same page, please.
Okay. So let me first present what we call build, operate, and transfer. Build, operate, and transfer is whereby you have two parties. One is the landowner, and the other one is the developer who comes with the capital, cash, to put up a structure, and they agree on a particular percentages. Usually, the the most common ones are 30-70. So the landowner takes 30% and the developer keeps 70%. Now, the build, operate, and transfer is whereby the ownership of the 70% by the investor is on a limited time. It could be 10 years, 15 years, 20 years, but most of them is usually around 30 to 35 years. So once those years have lapsed, the total ownership of the entire property moves to the landowner. And in this case, the main land, rather the title of that piece of land remains under the ownership of the original landowner. And after the lapse of those 30 years or 25 years, the remaining units will move the ownership into the ownership of the landowner. In that duration, the contracts, what they usually sign are usually long lease agreements. There's no full-time ownership. That's the main difference. That's the main characteristics of the build, operate, transfer in this case. Now, on the case of lifetime ownership is whereby the landowner join forces with an investor who comes in cash to invest and put up a structure, and majority of them are usually, most of them are usually residential units. So they build up a property. The main title gets dissolved on the completion of the project, and each individual unit gets a unit title. So the investor keeps in between, it depends, the numbers can vary. I've seen between 20, the highest that I've seen, which unfortunately didn't materialize, was 50%. That was a ridiculous number, and I was surprised that landowner turned it down. And that guy has been looking for investors for the last 2 years. He hasn't been able to get any. Anyway, so it could be anything between 20%, but currently it's between 20% and 30%. Those are the running numbers. Occasionally you have 35, but it's rare. Usually it runs between 20. So whatever units that are constructed and completed, the developer has unit titles. So in the process, the ownership is maintained for the duration of the original title. If it's 99 years or whatever the number of years that are remaining on the title, they all keep. The reason why majority of investors now want lifetime ownership is because most of them, they come into the project wanting to sell almost all units. For example, if say they build 100 units, the landowner keeps 30 units, developer keeps 70. The developer will sell, in most cases, out of the 70 may sell 60 units or even 65, it depends, and retain a few. The reason actually why they retain a few, I'm not sure if anyone would have any idea why, but usually is to capitalize on the income stream that this property will bring on what we call a service charge. In Masaki and Upanga, for example, the peninsula and Upanga, the monthly service charge on rent on residential units is anywhere between $100 to $200 a month. So imagine the developer will retain that right from the beginning of the JVA. So if they sell all the units, they lose that right. So in order for them to retain that right, they have to maintain a few units to be legible. So that's a key issue. The reason is the investor will recoup the investment quickly by selling. And currently, usually most of the properties here, by the time the construction is completed, in fact, before even the construction has completed, you find that all units have been sold during the pre-selling period in the time of the construction. So those are the two key differences in the private investment as far as private investors and private landowners, whereby the National Housing has a completely different policy where they operate on build, operate, and transfer. I don't know if there's any other question before I proceed.
I think you can proceed unless we can also use the chat room to raise our questions. Not any question from my end. I'm looking at the chat room. I don't know, Diana, if there's any other question. Diana?
Yeah, I have a question. So, thank you for a wonderful presentation. So before you continue, I know you're well versed with the property market right now in, as you say, in Masaki, right? So you know the joint venture between individuals and individuals that are happening right now. So is there in any way, as you see it going now, we have a lot of investors coming in, the Chinese who are here most of the time. So as you see it in the housing sector, do you see it in any way shortening the housing demand that we have? So of course we have the ongoing projects, and you, as you say, people are constructing. The demand is good. So is it in any way shortening our housing demand that we have?
Currently, no. There's actually demand is actually way higher than the supply.
Okay.
And looking at the current situation that I see in the market with economic stability, political stability, and things are, because generally there's a positive outlook that foreign investors have of our country. I don't see this changing anytime soon. But anything can happen in the future. We can't predict the future, but this is my personal perspective.
Okay.
As in fact, there's another problem that we now see in the last few months. There's a short supply of prime properties for joint ventures currently. There's a very serious short supply at the moment. Any question or any point that someone would like to clarify?
Thank you. I think there's a hand from Salmin. There's a hand from Salmin. I don't know if Salmin, you can unmute and ask your question. And I think there's also a comment from Michael. Salmin, please, and Kevin as well. So yes, maybe Salmin and then Kelvin. Salmin, the floor is yours. Salmin, if you can unmute, you're speaking on mute, hatukuski. Salmin, yeah, if you can unmute. Okay. If you can unmute, Salmin, we cannot hear you. If you can unmute and then another 200. Salmin, I don't know if you can hear me now. Okay, any other question? If you have a question, please unmute before we allow Sultan to carry on. Any other question? Okay, so yeah, I cannot hear any other question. So I mean, okay, I think there's a connection issue with Salmin. It's Kevin. Please raise a question and then we can allow Ahmad to carry on. Kevin, Karibu.
Thank you, Ahmad. One question out of curiosity. What's the average return to most of these properties that we are talking?
Average return on investment?
Yes.
Currently, I'm aware of about 18% on annual rate of return on investment. Most of these properties, I'm speaking Peninsula, as far as return, many investors should be able to recoup their investment within 5 to 6 years. But it's anywhere between 18 to 24%, depending on the investment value, depending on the cost of construction and various factors. But our market is considered one of the best. I had a meeting a few weeks ago with the Somalis. They were actually astonished that the rental values here is far better than Nairobi, because of course there are many factors. Of course, there's a short supply of properties, so the landlords and developers can get away with overpricing their property even on rental. So those factors drive the main key drivers for this healthy return on investment.
Thank you.
Now, if there are no further questions, I would like to clarify one more point.
Yes. I think I saw Salmin raising a hand. Salmin, before we allow the qualification, Salmin. Yes, Karibu.
Have you heard me now?
Yes, loud and clear, Salmin. Karibu.
Okay, thank you. I would like to appreciate from Mr. Presenter on his presentation on a joint venture in aspect of real estate as it may concern. But the way it seems JV is in practice, currently, it's meant for profit generation to the partners and not meant to curb the housing deficit in Tanzania. So how are we as the one we are in need of to curb the problem of housing go through on how to fill the gap? Because when we meant on those JV at it may concern, mostly of our investors come in a commercial concept. How can we now materialize that to fill the gap? Maybe the price sold through JV to be in a way that can be sustainable, can be affordable to curb the gap of demanding of housing in Tanzania.
Excellent question. There's a catch-22 in a situation, right?
Yeah.
Tanzania has moved from being a socialist country to a capitalist country very rapidly, you know. Unfortunately, many forces have happened in the last few years whereby our policies and our laws and our regulations have not been able to catch up with the situation on the ground. Meaning, there's a huge influx of Tanzanians moving to the city, particularly Dar es Salaam. There's a huge influx of investors flocking to the country. We're now operating on what we call we are now an open free market. Now, under the circumstances, any investor who is coming to the country and they look at, because we have a problem of shortage of housing, and not just housing, forget even quality, just housing generally, we have a very serious shortage. The investors will usually pick the most profitable segment or most profitable geographical locations that they see. Now, in order for these people to look elsewhere, there has to be some incentives. And at the moment we don't have, and it's a responsibility of the government to give these incentives. For example, today, if the government would like to see more housing, say in Kigamboni, in joint ventures, or Mbagala, there has to be some specific incentives that will attract investors in such areas. Other than that, the investors will simply go to what the numbers are showing. And this is the truth. Even if I put yourself in the shoes of the investor, you'll do the same. In many countries, usually it has to be a purpose-driven. It has to be a policy driven by the government, where you give certain incentive, particularly financial incentives, or an incentive that can be translated into financial gains by the investor. Okay, for example, certain tax holidays, certain exemption of certain, whatever it is. But this is why we're having this discussion now. Before you pose this question, I was going to clarify a few things. We see joint ventures coming into this country, but you'll be surprised, over 90% of these joint ventures, particularly that are happening at private investors and private landowners, almost 95% are happening within Masaki. And there's there are two key factors for this. Number one is return on investment. And the factor behind the return on investment in Masaki is the rental value and the resale value. Look, if you're building a residential property in Dar es Salaam, currently, the medium range to the lower high-end range of construction cost in Dar es Salaam stands between $600 to $800 per square meter. Okay? If this same cost will be, if you're building the same building in Kigamboni, Mbagala, Temeke, wherever it is in Dar es Salaam, that will be your cost. But if you put this building in Masaki, if you are to sell, the current selling rate stands at between $2,000 to $2,600 per square meter. If you move, forget Masaki or Oysterbay, forget Mikocheni or Mbweni, whatever. If you move to Msasani, it goes down tremendously by at least 20%. If you move to Upanga currently, the selling price of brand new apartments is anywhere between, I think, it's anywhere between 1,400 to 1,800, somewhere there. So you already see that any developer would first and foremost consider the peninsula before any other location. That's the number one criteria. The second criteria that drives investors into joint venture is the shortage, or rather the scarcity of land and the cost of land in Masaki. Current price of a plot in Masaki and Oysterbay, the selling price currently is about $1,000 per square meter, right? If you go to Upanga, it goes down. If you go to anywhere, but it's this factor that drives investors. Instead of buying land, they'll prefer go into joint venture. The other thing is it is a bit bureaucratically, it's a lot easier to start a construction project under joint venture than to moving into buying land and going into the conveyancing process all the way to break ground. That's number one thing they look at. The second thing is, of course, land is expensive. If an investor comes in to build a building on a 4,000 square meter plot in Masaki, for example, it will cost them approximately about $4 million. But if they enter in joint venture, that is almost 50% of the cost of the construction of the project. So they would rather go into joint venture than buying land. Those are the issues. Now, if you go across, for example, in Mikocheni, a 1 acre plot would cost you probably 50 or 30% of the price of Masaki. The investor would rather buy, but again, there will be a situation. What will be the return on investment? So these are the issues that they have. Now, going back to your question, how do we address this? It's very difficult to pin the investors to particularly the foreign investor, even the local investor, into considering covering the gap of shortage of housing when their basic interest is to get the return on their investment. Those are some of the key issues. The other thing is, the issue is most of these investors are targeting the upper middle class and the higher class, and it's a very small segment of the market. The biggest problem that we see currently that is facing is the lower middle class and the lower class that really suffer in terms of availability of housing units. Those are the main areas that I see. So I'm not sure if I've answered your question.
Yes, absolutely. But the way it seems, JV now is not meant to solve the problem we have. That's what I can see.
I agree. At the moment, with the situation on the ground, it doesn't solve the general market the property availability. It doesn't. But it has greatly solved the availability of the high end, the upper class demands for housing. Because let me tell you, for example, a standalone home in Masaki a few years ago would rent to as much as $10,000. Currently, they can't get that money because now most foreigners would rather rent an apartment that will cost them anywhere between $1,500 to $3,000, depending on the quality. So that has led into covering the gap of the upper class and the upper middle class. But these other classes, absolutely, JV is not the answer. But can the government do something? Certainly. How can they do it? That's a question of a discussion.
Okay, thank you. But I have something to add on.
Oh, okay. Please carry on, and then we'll allow him to finish the presentation. Yes, Salmin, carry on.
Okay. Because the nation or our country meant it to serve the gap for maybe when you balance on a number of people who are in demand, obviously they are in a middle class, civil servant, and all kind of people. And those who are in demand mostly are from the hinterland, maybe within the regions, not in in the big cities like Dar es Salaam, Mwanza, Arusha, and all that. So what I can say, we as the practitioner of real estate, how can we able now to streamline on how can we solve in a real this problem or this what is going on real estate development? When we say that JV is almost on the peninsula on big cities like Dar es Salaam, and it normally goes with an individual, why don't we come with something like instrumental ideal to say how to advise the government that we are not supposed to maybe to allow for the private, for individual ones to go with the maybe JV from the other nation without having a sort of like a public interest to serve the interest of the mass. Because I think that the mass couldn't afford to have a house fetching such amount of money in those area around Peninsula, Musasani, Mikocheni, and all kind of. Want we deploy it to be used even in the hinterland or in the region wise, in all kind of.
Yeah, I agree. I think the first and foremost, we as a professionals who are working in the real estate industry, the best thing we can do at the moment is have a dialogue with key stakeholders, the investors, but I think particularly with the decision makers in the government. For example, the Minister of Lands and Housing and others, because there has to be some. Tanzania is unique. The way things work in Tanzania is completely different from many other countries. And sometimes we need to come up with our own solutions. So it's up to us to have a dialogue with these decision makers, the Minister of Lands, Minister of Housing, people who, the government officials and institutions that are dealing with housing and land issues, that we need to come up with something that will provide solution. It may not be an answer to the entire problem, but at least to a certain degree whereby we eradicate this problem. For example, right? There's a VAT on brand new apartments that are selling. And, that also makes housing more expensive, right? Or how can national housing come in and solve this problem? The national housing in the past was, I grew up in this country, right? Many years ago, national housing's objective was to solve the problem of housing. But while it was solving that problem, it nearly went bankrupt. So in the process of reviving national housing, it went against its own primary objectives. It's a catch-22 situation, but yes, we need to have a dialogue, and out of that dialogue, I believe some solutions will be brought forth, whether policy, whether some kind of financial incentives, whether taxation issues. I don't know, but there are many. It's a piece of cow that can be eaten from every part.
Okay, thank you very much, Diana. If you can, I think I know there's some other questions, so maybe we can allow we can allow Mr. Ahmad to finish the presentation, and then we can open space for questions. That's my proposal, and we can use the chat room. I've seen Dr. Felicia and Tom has already joined as well. We can use the chat room for questions. I've seen some questions from. Some raised question from Mr. Charles, from Kelvin and Michael. So please carry on with the presentation, Ahmad, and then we'll switch to question and answer, if that's okay.
Okay, thank you. Now I'll proceed to the challenges and risks of joint ventures. From my personal experiences, these are among the issues that I see that these are the challenges that the joint ventures are currently facing. I'll quickly mention them, and I'll give you some real life examples that I have personally seen and I've witnessed, and you know, I'll speak about them without naming names. Now, one of the issues we have is what I would call unbalanced power relations. You know, you have an investor, a Chinese investor coming into this country, or a Turkish investor. They come from a different country with vast knowledge and expertise in real estate. But you have a family of 5 siblings who inherited a property from their father, who maybe many years ago was a businessman or was an officer in the government, whatever it is. And they meet on the table to discuss. It's a very serious issue. These people are talking money that these others have never heard of, or they've never even held in their hands. It becomes difficult. There's a problem, because you have one side where a foreign investor, or even it could even be a local investor, because there are many local investors who are, you know, they have experience. They talk about money that many people who have land they've never heard of. It creates some kind of insecurity when it comes to decision making. I'll give you an example. 2 months ago, I was sitting in a negotiation among this was a family of 3 siblings, very well educated. They got a property from their late father, and there was a group of investors who were very keen to invest. And there was a discussion of an investment worth about $25 million. And of course, there was a very, in my personal opinion, professional opinion, these 3 siblings got a very good deal, a deal that would have given them at least 45 apartment units and additional many other units, commercial and retail spaces as well. In the middle of the conversation, these investors, well, naively, you know, lucky enough, I've worked with people who run businesses as a manager for their businesses. This is a language for me which is familiar, but for these people, it's a language they've never heard of. These people said, you know, let me use Kiswahili. Mama, unajua hii sio wafanya biashara, kwa haya mambo inabidi uyachukulie polepole. The deal was over. The deal was over because the interpretation from these siblings was that these people wanawadharau. And temper flew from the landowner, and believe me, that deal was over and it never went back. So it's a serious problem, and I've seen it many times. It happens all the time. It's a very serious problem. Particularly, it affects mostly the local landowners, especially those who've not grown in, majority of us, to be honest with you, we've not grown in families whereby our parents are businessmen, you know. So we get intimidated when these people are in front of us and they're negotiating, you know, with us. It's a very serious problem. The second issue is the concern with land titles. It's another serious problem. You know, we've grown up in a society whereby owning land is everything besides a grave. So when you tell a landowner that the main title has to be dissolved and then you get unit titles, many of them become very reluctant to proceed. And this has happened countless of times. I'll give you one example. I was sitting with a landowner in Sinza, prime property, about 2,000 square meter, 2,400 square meter plot on Chekelango Road, and brought in an investor. This investor was actually an institution, a financial institution. And the deal on the table was a 50-50 split of that land. And the deal was, and the offer was, this institution said, whatever I build on this piece of land that we'll take, we'll build exactly the same on your land. But the condition is that title has to be, there has to be some subdivision. We keep the full ownership of the land and you keep yours. This old man is an old man in his early 80s. He said, we would like our title to remain in my family. I want my children to own this land. And I had, before that, I had several meetings with this old man to explain how the process worked, but he still wouldn't budge. In the end, he said, no, it's a non-negotiable. So it's a serious problem. It makes many people lose a huge opportunity right in front of them just because some people just want to relinquish the ownership of the original title. The other issue is administrative obstacle. Now, very interesting. We have a very serious problem of bureaucracy in this country. Early last year, I think in January, I had a discussion with a Chinese investor, with an old man in Masaki here, and everything has been decided. Deal has been, all the terms have been agreed. It's now 1 year. We haven't got the clearance from the government for that joint venture to go through. As I'm speaking today, the Chinese investors has traveled to Dodoma to talk to the commissioner of land to resolve that issue. There's a bit of a complexity because of the nature of that investment is a bit complex. I don't want to get into details, but this is a very serious issue, and I've seen it, and it affects. And you know, most investors, from my experience, and you agree with most of you, is that investors, one of the key things in investment is time. People with money don't want to waste time. And it's one of the issues that this country has to resolve. Everything is too slow in this country. Everything is too slow. I'm not saying this as a Tanzanian, I'm saying this on behalf of the investors. They find everything too slow. Another issue is of course, the financial limitations. I'm not sure if I need to get into so much details. Let me give you an example. Currently, the banks are lending at anywhere for such big projects, anywhere between, I think if I'm not mistaken, anywhere between 12 to 16%. Now, you're looking at financing that has that kind of interest on a real estate investment or housing, whereby even the growth of rent alone cannot catch up with that. It becomes almost impossible. When you have 12% to 16% of interest, and on top of that, you have 18% of VAT, and on top of that, you have a lot of, and I'll speak with all honesty here, you talk a lot of gray areas whereby some money has to exchange hands. Everything becomes too expensive. And on top of that, you bring in bureaucracy. It's a difficult situation. So the financial limitations is one of the key things. For example, many people have in Tanzania, in Masaki, they have prime lands, but they can't access the financing whereby they can sit down with an investor, say, okay, fine, I'll bring in land and an extra cash. Let's do this joint venture. Almost all these investments, joint venture investment, you have owners who have nothing else to bring on the table other than the piece of land. Absolutely nothing. I know of only, I think, 1 or 2 investors that I've worked with, that I'm working with actually, who have that option, but majority, they have nothing. In fact, rather than bringing money on the table, they're the ones asking for money from the investors. So it's an issue. It's a very serious issue. So this also makes it difficult for the landowners to have equal power in the negotiation, or rather to have a voice in negotiations. The other issue is disparities in culture, you know, and the culture here, I explained earlier on how we Tanzania have grown up. Investments and business is, to majority of us, this is something new. But the other thing is the issue of culture, whereby you have a Tanzanian negotiating with Chinese, or an Arab, or an Indian. Usually they have that issue where there's some kind of mistrust among parties. And when you dig deep, you realize the mistrust, the base of that mistrust is absolutely based on culture. Someone will tell you, our Hindi bana, or someone will tell you, our China bana. You know, they can't tell you for a fact. They don't have any clear, but it just, there's that feeling. So it's a challenge. Another thing that affects this joint venture negotiation is ineffective communication. You have many investors who do not want to disclose information. Well, from the investment point of view, it's understandable, but it makes things difficult. For example, I had a few weeks ago, I had a negotiation I was sitting with, and the landowner simply wanted to see the profitability on each part. And the Chinese investor said, no, I can't give you these numbers. Why should I give you these numbers? You know, and naively the Chinese said, that's the share I'm giving you. You either take it or leave it. And that's exactly how this investor said it. You either take it or leave it. And this old man said, you know what? I'm leaving it. So there's that ineffective communication whereby, you know, some information is kept hidden, and sometimes some parts cannot clarify things clearly for the other party to understand and make an informed decision. So it's another challenge. And the other issue is the legal complexities. We have, and this usually affects the landowners in this situation. Most of the landowners, they can't even afford a lawyer. When they come into negotiation for JV, when they can't even afford a lawyer. So there's a lot of complexity that they need to juggle around, you know, going through the terms and conditions of the contract to understand the process. So sometimes when these issues are explained to them, in their minds, they feel like they're being set up into a trap. So you either find some good deals that are failing simply because of misunderstanding and, you know, the failure to juggle through the legal complexities by one part on the negotiation part. And the other thing I would say with all honesty is I'm a real estate agent. Sometimes you find that I've brought in two parts for joint venture discussion or negotiation. Then suddenly out of the blue, once we get out of that meeting, you have either one or the other part of the legal teams wanting piece of my cake. And it makes things very difficult to work with sometimes as an agent, even sometimes as these investors, because you have lawyers who also come in with some scrupulous demands that sometimes they make difficulties. The other issue is unbalanced sharing of risks. We have a situation whereby in the joint ventures, where one part has higher risk than the other. Usually it's either the perception or the truth. I was sitting in one of the joint venture discussion whereby the landowners were a bit difficult, and I was trying to explain to them, look, this investor is coming in with $10 million. They are going to put a structure. In 24 months, they'll give you X number of units. In that particular property, I remember they were being offered, if I'm not mistaken, about 13 units. And they said they're too little, you know. It's very risky for us because we're leaving land. I said, look, at the time of the completion, this investor is now is working to recoup the investment. At the time of completion, you are actually made a profit because your land that you brought in will be X amount, and your value of property you're receiving will be 2 times or 3 times more. You've already made your profit. You're actually going almost immediately, you're generating a steady income of cash. And these imbalances usually create a lot of difficulty in negotiation. The other issue that is key in the joint venture businesses, and I'm speaking from my perspective and my experience in this joint venture, which involve private landowners and the private investors, is the capacity building. But the capacity building particularly on the landowners, because majority of these people, if not all of them, are usually Tanzanians, who many of them do not really have a clear understanding of what joint ventures are, what they expect. Most of the time, they're coming into negotiation with very limited knowledge or very uninformed or misinformed. Let's say, for example, a landowner comes into the negotiation whereby he says, I've been told that I have to get $200,000 and 40% of the units, nothing more, nothing less. You know, it takes time to really get them into understanding of this nature of investments, the nature of negotiation, the responsibilities, what should be, you know, the give and take. It becomes very difficult. In most of the cases, I'm spending half of my time educating my, you know, the other part. And I believe it's something that needs to be done, because many of the landowners actually end up shooting down a proposal or a potential deal that potentially a deal of a lifetime. I've seen it a few times, and me as a Tanzanian, usually sometimes it breaks my heart to see this. And it comes out of sheer ignorance of these people. I'll give one key example. 3 months ago, I was working with a certain investor. Lucky enough, he's a local Tanzanian investor. He was born and raised in Tanzania, who I know very well. And he wanted to invest. And we got him a piece of plot that was about 1,300 square meters. And this piece of plot is what we call a Santem Kappa. I don't know if you guys understand what a Santem Kappa is. With about 16 years remaining on that Santem Kappa duration. But the investor was okay with it because his intention was not to sell, was to rent. And he had offered them 25% of the units, which were about 6 units. And this family lives there, a small, a decent home, very basic home. And they were offered 6 units, which translated to 25% of units that were expected to be constructed there. And $60,000 as a relocation allowance. Believe me, the next day, these people didn't want to see me or the investor. They said, look, we've been advised by our lawyer that the least we can get is $150,000 and 30% of the units. And there was nothing you could reason with them. And this was the initial term. There was absolutely nothing that you could reason with them. They only said, look, our lawyer has advised us, this is what should be on the table. Anything other than that, we should say no. I asked them a very simple question. How long has this been property in the market? They told me 3 years. How many serious offers have you got in those 3 years? They said, no, we haven't really got a very good offer. And I told them, could you say that this is the best offer you've had so far? They said, yeah, yes, it's so far the best offer. I said, look, does your lawyer have any offer that can beat this or can match what you're saying? He said, no. I said, then how do you turn an offer on just the hearsay? So the example I'm giving is, I see clearly there's a need for capacity building, particularly on the landowners who are our fellow Tanzania. It's a very serious problem. And I see that it affects, and in some cases, local Tanzanians end up signing very short deals on joint venture because of they don't have the capacity, or they engage people who do not have full knowledge of this industry. Another issue that I need to discuss, which is a challenge, is an exit plan strategy. And there has been some few examples of joint venture deals that went sour. There are quite a few here in Masaki. And usually these end up, and the thing is, when you have one deal that has gone sour, the landowners would hear those more than 9 that went successful. So many of these deals usually end up in the past, so many of these deals usually have a very, very weak or rather a terrible exit strategy when things go wrong. I had a discussion one time investors and the landowners, and that was one of the key issues, because the investors said, look, we will build, we intend to invest $15 million. And the landowner's main concern was, what if they fail? I said, look, one of the conditions that I've put and the investors agreed is that before signing of the JVA, there will be proof of funding provided. So if this investor does not provide proof of funding, you are free to reject this proposal. But then I said, that could be one of the exit strategy. The other thing is you have to engage a lawyer. And the problem was these people could not afford a lawyer. So in the end, every time we would suggest a potential exit strategy, these people could only see another potential problem. Every time you discuss with this. So we have a problem whereby many of these deals are being concluded with very weak exit strategy. I have a situation that we know of a certain example here in Masaki. Landowners entered into a JVA with a certain investors about 7 or 8 years ago. And the investor failed. They dug up the foundation, put up a few rebars, and they failed to come up with the money to finish the project. And this property owner has to pay that investor over $200,000 just to terminate the contract. But then again, you have a new potential investor coming in, and you have a landowner who tells the new investor that you have to pay first that $200,000 for the investor who failed, so that I can enter an agreement with you. And nobody's going to do that. And if you dig deep, you realize the problem was there was a very poor exit strategy as far as the contract is concerned. That's a very serious issue, and I see it all the time. Another key problem that I see, and particularly it affects usually both parties, but mainly the local landowners, due diligence. You have an investor from China, for example, or from Turkey, or from Kenya. It's very difficult. These people come up with all kinds of discussion, all kinds of pomp of how many projects they have created and how many they have executed and so forth. But to do diligence on the investor is very difficult, because many of them come into this country without any experience within the local market. So it's difficult to do diligence on their part. Sometimes also for the investor is also difficult to do due diligence on the owners, particularly when the ownership on the property owners, there are more than one individual. You have a situation whereby it's difficult. You strike a deal with 3 siblings. There has been a situation whereby an investor signed a JVA with a certain family. Before the construction started, some nyumba ndogo wife somewhere came up with family who also wanted a piece of that cake, and it ended up into a court case, and the project stalled. So these are real things, they happen, and we don't have a very good system whereby you can absolutely say with certainty that the due diligence has been done exhaustively. Yeah. The final point, of course, is an issue of estimate of cost and valuation. This is it's minor, because currently it's the construction costs. It's fairly easy to get, but usually when it comes to valuation is a challenge, because if you compare the market value versus the official property value, may be different. For example, you have a landowner whereby he wants compensation for himself, for his tenants, and maybe some money that he can go and have some good time. So putting the estimate of cost and valuation is another challenge. So these are among the many of the challenges that I see in joint venture, and I have personally experienced them. I've seen it, if not within my own personal experience, I've seen it with other deals that I've witnessed. So I'm free to receive questions or any comments.
Thank you very much. Diana, you want to take over from here? Diana? And I think this has been an interesting presentation. Thank you so much, Ahmad, and we can use the floor for questions. I just wanted to add before Diana, just to add my reflection on this to also be on the same page. We are building from the fact that there's a lot of construction going on around us, and the understanding that our local landowners have is limited. So what Sultan has presented, I think we're all free to raise our way of understanding our background, not to throw the questions to him as if he's the one answering everything, but he shared his side. And maybe I wanted to just add that maybe there's a need to have a guide on how joint ventures arrangements are being done, a real estate joint venture arrangement guide by the ministry. And I know some colleagues here are working in the ministry, maybe have an idea of that, if that document is there. I know the National Housing have their document about public-private partnerships. And I think there's also a guide from the Ministry for Finance. But I think on the other side of the coin, we need a guideline for joint venture arrangement in Tanzania on real estate, and maybe it will help us bridge this gap of information, as Ahmad has said. Diana, the floor is yours for questions.
Okay, thank you, Javike. So just to put it out there, Sultan, this was a very nice presentation. You got my attention from the start. So I don't have a question, but I would rather contribute to what Salmin asked earlier concerning on how are we curbing the shortage on housing demand, right? So clearly from an investor's point of view, they come in with a profit-oriented mind. So there's no way that their end game is to curb the demand that is currently in the country. But what can we do? So I think an answer to that would be we're supposed to have a deliberate, the government is supposed to have a deliberate plan on how are we moving forward from this. So I would give an example. For example, when you look at Zanzibar, currently you see there's an influx of high-end tourism investment there. So the attention has shifted from the local demand to luxurious investments. And the government decided that at the end of the day, the local working population are being left behind. There's an evident gap. So what they did is I think there was an article in the newspaper a couple of weeks back. And so as part of a program or efforts to solve this issue, they decided to allocate land for low-cost residential developments, and also they're trying to partner up with private investors so that they can build up affordable housing for their population. So I don't know how this is going to turn out, but at least we see that there's like a nation or a government effort, deliberate. It's aimed to reduce this shortage. And on the same note, we look at our neighbors, Kenya. So there's also a nation's initiative. They have this something called Affordable Housing Program, AHP. So I don't know how, I feel like there's the employees, there's something they contribute, like when you have your salary and then you pay payee and SDL. So I think there's also something they're contributing that's going towards affordable housing, something like that. I'm not sure, but when you look at it closely, you see that for housing demand to be, so the problem of housing demand to be solved, we don't have to leave this issue to the private investors or anything. The government has to chip in as well. So it can be from the police level, or it has to be from the police level, of course, or any other initiative that are putting in place, but it has to be there, So I don't know from our side as in the country currently, if there is any initiatives that are going on where the government is also putting a hand to support the investors who are trying to build up affordable housing so as to shorten this demand. so that at the end of the day, the investor is trying to put up something, it's affordable to the people, but at the end of the day, they also get some profit to that. So that's my 2 cents. Thank you. Hello?
Yeah, nashukuru Diana. Thank you for the contribution.
Interesting. So I think we can allow for other questions in the chat room. There was some other question at the beginning. There's one from Michael who asked if wizara wanatoa hati ya kila unit in a building, let's say it's 10-story building. I think this is direct. Kunakuwa na unit titles ambazo zitatolewa kwenye kila unit. I could also be kwenye kila floor kwa maana ya shares. Yeah, and maybe you would like to take that, Ahmad, from, I think from Michael. Ahmad, if you're in a position to respond to that. There's also one from Kevin Manasseh, say there's a myth JV at some point has a lot of misunderstanding which leads to conflicts. I think you responded to this already. And there's also a text here from Charles Kitalia, saying that joint ventures are traditionally based for a specific project or goal and often have a limited time frame. However, I'm interested in exploring the idea of establishing a lifetime joint venture that could eventually evolve into co-occupation. In that case, of a JV between non-citizen and citizen in Tanzania, without forming a special purpose vehicle SPV, wouldn't this potentially violate the legal framework governing land ownership and occupancy in Tanzania? Yeah, interesting question. And then there's another one. Is it appropriate to focus on joint venture primarily for generating income? I think we've discussed this as some stream from service charge as an investor. From my understanding, service charges are not considered as income for an investor, but funds meant to cover expenses for services rendered in the property. Any surplus should be either be refunded to tenant or served for the next year, rather than being treated as profit. What's your thought on that? I think that was more of a taxation issue, and how do you charge service charges as income or not? And I think there's also a comment from Dr. Komu. Dr. Komu, if you want to say this by yourself, if you're around, we'll warmly welcome you. If you can react to a very interesting presentation from Sultan. Dr. Komu, whenever you're ready. I know I'm putting you on spot, but if you're ready, please, we're more than happy to hear from you. Otherwise, yes, Dr. Komu, otherwise, Sultan, if you want to respond to some of the questions raised. And yeah. Yeah, so Dr. Komu.
I'll respond to the few points before Dr. Komu comes in quickly. The final point there was very interesting. The issue of service charge. It's true. Service charge is supposed to be more like a basket of funds whereby all owners contribute for the maintenance, general maintenance of the property and general upkeep of the property. But the reality on the ground is completely different, because yes, the property manager would, because the investors take two parts, which in other countries they're not supposed to. You cannot be both a developer and a manager, right? But in our case, they do both. And in fact, it's a key thing that the developer will not yield, because they want to maintain that steady income. Because if you look at, for example, you have, let's say, 20 units on a property. And in Masaki, case of Masaki, for example, each unit is generating $200 a month. That's, you're talking about $4,000 every month. That's almost $50,000 annually. Now, if you look at the cost of general maintenance of the public spaces, the common areas, you hardly use 50% of that. So the investors who also act as a property developer, the property manager, would keep much of that fund. Ideally, it shouldn't be the case, but they do it. So it's true that fund should be more of a basket, for a common basket for the owners, but the reality on the ground is completely different. This is why the developers will always fight hard to keep a few units to maintain that cash flow. Yeah. I'm not sure if I remember the other questions. There was one long question that was read. I don't know.
They should be in the chat room. They should be in the chat room. If you can please, I don't know if you can see the chat, but there's one on. I think there's one on co-occupancy. If you can have JV for a long time, that. Or you can.
Yeah, there was one. Somebody mentioned whether they can do long term. Yes, actually, at the moment, I don't know if this person asking a question joined somewhere in the middle. In the beginning of this presentation, I explained two key types of joint ventures that are common in Dar es Salaam, particularly among the private parties, whereby the landowner is the private owners, and the investors also private entities, whereby you have the build, operate, and transfer, and of course the lifetime ownership. Currently, almost all joint ventures are on lifetime ownership, and I explained the reasons why. So if this individual is looking to that, absolutely. And in fact, right now, whenever I come across landowners who are looking into build, operate, and transfer, or limited time ownership, I tell them point blank, you have extremely limited number of investors looking at your property. So you'd better think twice. Yeah. If your interest is really to see somebody coming to invest in your land, you really have to reconsider your position as far as your property is concerned. And yeah, so I think that should be enough. Yeah. Thank you. Unless otherwise there's anything new that I can respond to.
Thank you so much. I don't know, Diana, if there's anything.
No, I just wanted to add something real quick from what Sultan said on the part of service charge. So you see the developers rushing in just to, fighting to have a share on what the tenants are contributing as service charge. I think there is something, I don't know, I'll ask from your point of view because you have much experience on this. Should there be like an audit whereby the unit owners or the tenants at the end of the day, they hold the developer accountable on how much they have contributed and how much has been spent? Because at the end of the day, the aim of having service charge is not to just to pay and contribute to that basket, but it's the main upkeep of the property. So if at the end of the day, people have the knowledge that they're supposed to even hold the developers accountable on what has been spent, I think this could be controlled. I don't know. So I would like to hear your views on this.
My personal contribution on that point would be, if there's anyone within the land, Ministry of Land here, maybe can give us an insight, because I don't know. I'm not fully conversant on the legal requirements of this kind of property management. I don't know whether the law allows it or not, because if there's no legal frameworks that stops that, it will continue happening. The only way that can stop that is to have a specific legal framework which actually stops that. Other than that, it's going to be very hard, because at the end of the day, these people negotiate on these terms, and whoever has more power in negotiation, they take it. Yeah. So maybe somebody who has better understanding of the law, particularly on what they call the association. These because such properties have to have an association. So I'm not sure whether the legal framework allows it or it has particular framework that maybe somebody can contribute.
Yeah, thank you very much. Thank you very much. There's a hand from Elizabeth. As Elizabeth is getting ready, I see this as a policy issue, and I stand to be corrected. I see this as a policy issue. How do we immediately separate developers from managers? And we already have competent property managers that could actually handle. And the challenge that we currently have is property manager actually engaged after the structure is already erected. Now, I think maybe we can have sort of policy issues. I know we are developing a law, a regulatory authority. This could maybe be as a policy issue that there should be, from conception of the structure, there should be an independent property manager from the get-go, from the beginning, and that will maybe ensure the interests of the buyers, I mean the potential buyers and the tenants are observed. That's my thinking. But yeah, Elizabeth is here. There's also there's a greetings from Dr. Upendo. Dr. Upendo, who is the director for real estate at the ministry. She could not join us, but she said she will be more than happy to hear what we agree, and we'll hopefully send to her our suggestions to them so they can incorporate our thinking as part of as they're developing the regulation. I just wanted to also quickly read few comments on the chat. There's one from Dr. Komu. He said he's in a very noisy place, so he could not join, but very insightful submission. Thanks to you, Sultan. And he also said, yeah, a lot of twists and swings worldwide, so it's a good thing, and we should maybe graduate this to a formal seminar. I think we'll take this comment, Dr. Komu, and see how we can make this into a seminar and we can physically meet to discuss. Salamino says, I'm so excited with the narration of joint venture agreement exit plans and strategies. Does it not associate with our laws, especially land laws and kind of TIC issues? In aspect of ownership, I think this was a question. I don't know if you can react to this. There's also, yeah, so Elizabeth and Kevin. Elizabeth, if you can raise your question. Elizabeth? Yes, Kevin.
Hello.
Yes.
Thank you. Sorry if I can mix Swahili and English, if it's okay. Yeah, I wanted to give an overview of one of the points on service charges. I just want to give an experience from our institution, National Housing, where we deal with joint venture properties, and also we have a way. I think that we need to incorporate that in other joint venture agreements on how to manage the property, joint managing of the property after development. For example, for us, National Housing, tunakuwa na mutual agreement on how to manage the service charges. Kwanza lazima kunakuwa na association of the tenants available or association of the owners in that building. If the, for example, part of it was sold and part of it owned by National Housing, part of it was owned by the joint venture partner, whatever it is, but we have to have a joint agreement on how we are going to manage the property, to manage all those common area services. Kwa hiyo kwa sisi National Housing tunachokifanya, lazima tunakutana pamoja joint na partner, tunakubaliana kwanza, lazima tutamweka professional property manager, lazima tutakubaliana service charges ni za aina gani na how to obtain those service providers, mfano mambo ya security, cleaners, how we are going to kuwapata na mikataba yao tunakuwa aware of everything that is going on. Alafu pia tunakuwa agree pamoja ni how much is going to be charged, because kama itakuwa overcharge in a way ambayo itakuwa inabaki alafu mmoja anafaidika, maana yake tutakuwa pia tunawaathiri wale wapangaji wetu ambao watakuwa wanalipa. Kwa hiyo kwetu sisi lazima tukae tukubaliane kwamba ni kitu gani ili tusiwaumize wapangaji. Kwa hiyo kesi kama hiyo kwa National Housing somehow tumeweza kuimanage kwa namna hiyo. Kwa hiyo labda I can advise katika hii mikataba ya private owners, private landowners na au developers wengine, katika mikataba yao you can advise wawe na hiyo article ambayo inasema baada ya development ya jengo kukamilika ni namna gani watamanage pamoja, ili wote kwa pamoja, yule landowner na yeye awe na say katika management ya jengo kwa pamoja. I think that is not good for left out katika kumanage jengo wakati naye ana part share ya jengo. Lakini kingine tofauti ambayo inaweza katoka na sisi shirika la nyumba, sisi kwenye aina zetu za ubia we have ziko in a way kwamba mwisho wa siku shirika la nyumba linakuwa na share kubwa kuliko mbia. We start with 25-75% of the space, then after 10 years we go to 50-50, Then it depends with the choice of the developer. Kuna aina ambayo after the extra 5 years anakuwa na 40, national housing remaining 60%. Kuna aina nyingine ambayo after 15 years extra in a total of 25 years developer anabaki na 25%, national housing anabaki na 75%. Hiyo ni aina moja ambayo iko katika modo zetu za JV. In that way automatically sisi kama taasisi tunakuwa na say kubwa kwenye modality ya management ya jengo, hata tukasema kuliko, lakini natural inatupa nafasi ya sisi kuwa na say pamoja. Kwa hiyo kwenye hilo swala la service charge inaweza ikaungana namna hiyo. Kwenye issue ya kumpata developer wa nje, kwetu sisi hatujawahi kufanikiwa kumpata wa nje kutokana na vigezo tulivyoviweka ambavyo tuseme in a way vinawabana wale international investors, kwa sababu sisi wakili cha kwanza tunaingia ubia na mlikasisi, hatuingia ubia na individual person. Lazima afungue kampuni Tanzania, ambayo ndani ya hiyo kampuni lazima one of the shareholders should be a Tanzanian. In that way most of them they don't trust Tanzanians on that, so inakuwa ngumu kwake kumpata Mtanzania ambaye ataingia naye kwenye ubia aweze kuja kurudi kwetu. Kwa hiyo we have been getting a lot of visitors, Chinese people from Nigeria, we have having a lot of interested parties, lakini wanashindwa kuja mwishoni kutokana na vigezo tulivyoviweka. In the part of the value of the investment, sisi tumeweka kigezo, sababu most of the properties ambazo tumeziweka kwenye soko ni zile ambazo ziko in very prime area, kiasi kwamba unaweza ukasema yani tayari inajiuza, yani mtu anakuja kuinvest sababu anajua itapata mapato makubwa au atapata revenue nyingi. Kwa hiyo tunategemea kwamba mteja atakapokuja, ili asituumize sisi, tunasema aanze na katika the ratio of their investment minimum ni 4 times of the land and improvements available at the time of the application. Kwa hiyo maana yake tukisema ni 4 times, kwa hiyo kama ataweka investment pale, mfano suppose the land in a value 2 billion, the improvements maybe is 200 million, kwa tuseme 2.2 billion. Akija akisema, tukimwambia 4 times tunaongea habari ya 8 billion. Tukijumlisha na ile land value yetu, mwisho wa siku tunasema the existing investment pale inakuwa 10 million. Sisi tukisema tunaanza ku own 25% of the investment, maana yake automatic sisi tutakuwa na asset value of 2.5 billion. Kwa hiyo sisi tumejiposition eneo hii pale investment inapoisha, sisi cha kwanza tunakuwa tumerudisha asset value yetu, sababu mwisho wa siku tutagawana na ile land. Na hiyo ndio kitu kimoja kikubwa ambacho tunaona taasisi zingine au individual wengine wanashindwa kuingia kwenye ubia, kwa sababu wana ile attachment of the land. Anakuambia hivyo, mwisho wa siku kwa ile ardhi tutamiliki pamoja. Mwambie yes, you have to forgo something to get something. Tumekuwa tukipata wageni kutoka taasisi mbalimbali ambazo nao wanaomba kupata experience on that. When you are telling them, mwisho wa siku lazima utatoa unit titles ambazo wao watapata share yao na nini, wanabaki no, we want our land to remain ours. That is not possible. Kwa hiyo ni vitu ambavyo sisi tulishaji position in a way, akipata share yake from the beginning, sisi tupata ya kwetu, tunarudi kwenye asset value yetu ambayo inakuwa imeongezeka, na mwisho wa siku tutakuwa pia na revenues zitakuwa zimeongezeka from the beginning. I'm sorry, on my way to travel right now. Naomba niishie hapa. I had a lot to share, lakini naona muda wote. Thank you.
Thank you so much. Thank you so much, Elizabeth. I was not sure if I should mention you are coming from National Housing. Now that you said it, we acknowledge the knowledge you shared. And so Elizabeth is, correct me, the real PPP manager for National Housing, if that's correct. So thank you so much, Elizabeth, for coming in and for giving us the experience. And I'm seeing that there could be lessons from experience of National Housing that we could actually adopt at the private sector, and it's particularly into the developer manager relationships. I think this is something we can build up, and hopefully once we organize for a physical meet, we'll ask Elizabeth for your availability so you can also share with us how National Housing is handling the JV arrangements from your experience and what are the lessons. I don't know if Sultani, you want to react Thank you so much. Thank you so much, Elizabeth. And please,
Yeah, I'm glad
submit.
to
Yes.
come to
Mhm.
in our office. So glad to share the experience.
Sorry, I didn't hear that.
We're glad to share the experience when we get
Thank
the
you.
person.
Thank you so much. Thank you so much. I don't know, Mr. Sultan, if you want to react to Elizabeth's comment. I'm seeing Kelvin. So Sultan and then Kelvin. Sultan, we are running out of time, so we'll be wrapping up. Sultan,
Okay.
Karim.
Asante. Yeah, what Elizabeth has shared is relevant. Absolutely agreed. Kwamba the service charges ideally have to be going into property, managing of the property, whereby both parties have to form what we call a condo association, and these things have to be negotiated from the beginning. Now, the difference, the challenge is, in order for this to happen, you have to have the policy and the legal framework from the government, because other than that, it's going to be difficult to enforce. Remember, when you have these private investors, or particularly the private landowners, they come with complete different interests as far as joint venture is concerned. And many a times they come onto the table to discuss joint venture. In some cases, they don't even know what they want. Let me give you an example. All right. I was sitting in a negotiation between investors and the property owner. These were siblings. There are 5 of them. The first thing I sat with them separately was because in the first meeting, the discussion was very difficult. We just couldn't get anything out of it, because at the end of the day, you have to have some key areas whereby you have to discuss and agree before anything goes. And I noticed there's a problem. So I asked for a meeting with those siblings. We sat down. I asked them clearly, what exactly is your objective for JV? They looked at me, they looked at each other, looked at me and said, by the way, we don't know. I said, before we go back to these further negotiations, you have to have an objective. And I said, look, I'm gonna give you an example, all right? You guys are siblings. You've inherited this piece of land as co-owners, okay? But each one of you has different interests. Some of you are looking for money. Some of you want to have units they can stay in. Some of you want to rent. You really need to come back, and each individually has to point out what you want. Because otherwise, how, as an agent, how can I work to make sure each one of you have got what they want? Is it the property that you want? Do you want to grow your asset value? Are you trying to generate a perpetual income? Or perhaps are you looking into each of you having properties that, because these were people who were most of them are in their 50s. I said, are you looking into maybe having property so each of you can have individual property that you can inherit to your children? These are the real issues that you need to seriously think and resolve and point out very clearly. So otherwise, and by that time when I was having this meeting, these people have had over 8 different conversations with investors, and none of them worked. You see? Now, so such kind of situation, they haven't even resolved the big things. How can they resolve the issue of property management? It's difficult. Unless otherwise it's put in the legal framework, it's gonna be very difficult for it to work. Because at the end of the day, and in most cases, the property management, I'll be very honest, as far as these private discussions, the private negotiations are concerned, this is never put on the table as a point to. So the investor secretly takes advantage of it. In some few cases whereby I represent the landowners, I tell them, use that as a leverage because the investor would want to keep it. So you either negotiate to get into an agreement whereby that fee is, you are part of that property management, or if the investor is interested in taking that, then get an extra unit or 2 or 3. It doesn't matter. We can do some calculations and come up with value. So you can ask for extra units or 2 or even more. But sometimes they don't understand. So by the time you go into the meeting, they're not bringing it up. So me as an agent, it's difficult to work with them and you know, to have that work in their advantage. I'm just sharing my personal experiences here, and I'm being candid. You know, these are the real issues, and I've seen them happening. And my only take is that it has to, in order for this to happen in every negotiation, in every joint venture, as far as private individuals are concerned, it has to come from the law. Other than that, it will not happen. Njavika, endelea tafadhali.
Yes, thank you. Thank you very much. That was a hard stop, but I think the point is clear. And I really like the idea of trading cost of management and extra unit. I think that's a good one. I didn't see it coming, and I know you need to do some calculations to establish that. But I think it's a good trade-off. That if you want to manage, then at least I can get an extra. Extra unit as an advantage. Kelvin, you're raising a hand. We are running out of time, so please use the chat room for your questions. I've also shared Ahmad Sultan's number. Sultan, I did that without asking for your approval, but I hope it's okay. Please, if you want to reach out to Ahmad, we really appreciate his time coming here to share his experience. And this is a typical, I don't know if typical is the right word, but he's an estate agent. Now, if people are telling you about who's an agent in Tanzania, you may not really capture, but this is an estate agent, and you can see the level of knowledge and understanding that maybe it's not documented, but we need to take this knowledge out there for people to learn and understand. So thank you so much again. And I've also shared our chat room, our WhatsApp chat for HousingLAB for you guys to, you can just click it and then you'll be directed to our WhatsApp group for updates. So please take your time to please join. Yeah, Diana, you were raising something. Please, if you can just say it as we wrap up, and I'll ask you guys to please turn on your video for our group photo before we wrap up. And I've seen a good number of colleagues here, at least to get some greetings from some of us. Namwana, I'm trying to pick a name. Najua tuko wengi, lakini at least Madam Rosemary, you can say hi if you're in a position. We appreciate. Yeah, so Rosemary, oh, sorry. Kevin, yes, and then Madam Rosemary, if you're in a position. Kevin.
Hello, I'll be quick. I know we're running out of time, but I've been thinking, Ahmed, is there a necessity to do some capacity building to most of these collective investment scheme to start these rates in Tanzania? Because none has been there, which is open, except the one with Watumishi Housing, which is closed. I think that could also help to embark this issue of housing demand and whatsoever, because there are big local investors. There is a lot of liquidity in the market, which can also be tapped from that direction.
Kelvin, can you repeat your question? I'm not sure I fully understood it.
Okay. I'm talking about these collective investment schemes.
Okay.
Don't you see a huge gap that real estate, like any expert in real estate, have to do some capacity building so that they can enter into JV with people and form these rates?
Okay, all right. Well, yeah, there's a lot of opportunity. Our biggest problem in Tanzania, real estate business, particularly the brokerage and you know, the agencies is not regulated. We don't have a database. In other countries, when somebody, and if you go, for example, today, if you go to say Canada or US and other countries, you want to invest, you walk into a realtor, you get into a database, you have everything that is available in the market, it's there in a database. We don't have that, you know, and information is clearly, you can get into this database, you can dive into values, costs, all these things, all these numbers are readily available. In our case, everything is just thrown out in the air, you know. Some of them are just false. So yeah, I think my point is, through the bodies that manage this industry, particularly the Ministry of Land and Housing, it is high time we go into that direction. We need to go into regulation. We need to form some kind of regulatory bodies where such kind of data can slowly start getting pulled in. And through that, then you can start having different activities. For example, you may have today, for example, we might have a seminar for capacity building for all people who are interested, who are landowners, who want to understand JVs. They can attend, or they can, they can attend these seminars or presentations or particular courses and understand before they go into the market. So there's definitely an issue there. Or somebody, an investor from outside comes in, they're able to walk in and understand this term. I'll give an example, right? Realtors in Dar es Salaam, for example, the agents, even in Masaki, they don't even know how to price their services as far as joint ventures is concerned. They don't know. And many fellow agents, they don't want to deal with joint ventures because they feel like, it's better to work with sales than joint venture because they don't know. And there's no, I don't know how we call it. Mfumo bado haujajiweka kiasi kwamba hata agents wenyewe wajue how much they're supposed to get as far as these deals are concerned. And it's even worse with the landowners. They don't know. Somebody says, I'll give an example. Half an hour before I came into this presentation, I was sitting in a negotiation between the landowner and an investor. And the landowner came with a lawyer and she says, from what I know, I'm supposed to get 40% and $250,000. And you see, and then you ask her, okay, how do you know that? I said, that's what everybody's getting. I said, if I tell you as a realtor that rarely anyone gets beyond 30%, would you believe me? He said, no, I know they get at least 40%. So again, there's a lot of misinformation. There's no basis for this information to verify, to check, and to. So, Kelvin, you're absolutely right. To wrap up, it's an opportunity whereby these things can be shared. But I think, in my perspective, it has to start with the bodies in charge of this entire industry and the entire country, because it's not an issue of Dar es Salaam peke yake. It's for the issue of the entire country. Yeah.
Thank you so much. Thank you so much. I think yeah, and if there's any other question, but Diana, you want to say something? And then, yeah, Diana, before we wrap up. But I think this has been very informative. And Diana, you're on mute. If you're speaking on mute, we can't hear you. And I think I just want to add a small clarification on one thing that was said here. I think there's a big question that is coming up that I think was raised by Salmin as well, that can joint venture address the housing problem? How do we strike a balance between joint venture addressing the housing problem and at the same time generate profit? I think that's a very critical question, and maybe going forward we could find avenues to and this is my personal opinion, that we could have joint venture achieve both, generate profit at the same time address the housing problem. And this is where we want, as you said it clearly, this is where the regulation has to come in. That's where the regulation has to come in to make joint venture for housing profitable. Joint venture, as we are addressing the housing problem for particularly middle to low income earners, we are all, at the same time, we are also generating profit. And maybe this is what we need to talk about: dedicated areas for housing joint ventures, dedicated incentives for those who are engaging in joint ventures that primarily address the housing problem. There has to be an incentive that maybe that could actually help. And now we are developing the National Development Vision 2050. As we talk about access to land, these are the discussions that hopefully they will be captured in the document to make sure we don't lose, because my biggest worry with joint venture, alternative joint venture, is direct sale. And it's just a matter of time we'll be having Chinatown in all of Masaki. That's my worry. Talking about Mikocheni, maybe we can address challenges of Chinatowns and other towns by engaging into meaningful and informed joint venture that does not necessarily remove ownership of land to the locals. That's my sentiment. But yeah, Diana, and then I also asked if Madam Rosemary could say something if she's in a position. We're running out of time. Diana, if there's anything, I'm trying to look at the chat room as well.
Okay, thank you, Njaviki. So there is nothing on my part. I just wanted to say thank you for everyone who was able to tune in today. This was a very nice presentation, very nice webinar. So thank you, guys.
Thank you. I think so. Please let us remove our video so we can take, let us turn on our video so we can have a group photo, please. It will be good for our reporting as well. For our reporting, I'm going to try to, Madam Rosemary, if you're in a position to at least say hello, we'll appreciate that. A group photo, everyone. You can just unmute and let us know where you're connected from. I'm in Dar es Salaam. If you are out of Dar es Salaam, we'll appreciate to know where you are. And a group photo for all of us. Sultan, you're on mute, hatukusikii, but yeah.
Mimi niko
Omari,
Dar es Salaam.
Okay. And where is your office?
Ofisi yangu ipo Masaki, Chole Road. Masaki, Chole Road.
Okay, thank you. And maybe if you can, if you have a position to, I think you have raised your phone number here. I think just who wants to talk to you directly, Sultan, they can just reach out to your number. I'll text it again here so that it's easy to make it. Yeah, so please try to take a quick group photo. Okay. Everyone, just turn on your video so we can have a group photo. Michael, thank you so much. Kelvin, I think they're at a place that they cannot turn on. We understand. But thank you so much for joining. Dr. Kom, thank you so much, everyone. We look forward to be connected again. I will share with you all the recording of this so that for those who want to learn more, they can potentially get this. Otherwise, I don't know if there's anything else. If there's anything else I'm missing. So we will communicate to you guys the next session. And as we have just had a proposal, we are looking forward to do a physical meeting that we can actually discuss this, hopefully. So we will, again, share with you the details once that is. But otherwise, thank you very much for everyone who has joined. Dan, I'm trying to take a photo. I cannot. If you can please help. The network has a way of disappointing us. But Sultan, thank you so much. I know we have had this discussion on the sides, but I think it's a witness you've delivered. Thank you. Thank you so much. This is a lot.
Thank you very much for your time, everyone, and I appreciate it.
Thank you.
For you to listen, to tune in and listening.
Madam Rosemary, before you disappear, at least we hear from you.
All right. Thank you so much, everyone, for taking your time to listen. So I appreciate it. Some other time.
Thank you so much.
Yeah.
Thank you so much. Madam Rosemary, hello to you. I know nakuwa kwenye sport, but I don't know if kama unatusikia. Madam Rosemary, kama unatusikia.
Yeah, thank you very much.
Thank you so much. Thank you so much. I think we really appreciate to have seniors and legends in the industry. So thank you so much for coming, and it's really, it motivates us to see that you are giving us your time to listen. To being part of the team means a lot. Thank you so much, Madam Rosemary. Thank you so much, Dr. Kom, as well, for you guys taking part to come. I will communicate to you in the next event, but there's one event tomorrow by DART. If you're interested in taking part, we'll share the document in our WhatsApp group. If you're interested in taking part in the session tomorrow, it's happening at University of Dar es Salaam campus. So if you want to take part, we had this last year, we're doing it again this year. When they're discussing about rapid bus transport and their development. So if you want to take part, please reach out. There's also another training tomorrow by Arith University Land Administration Unit that we are aware of. So if you want to also take part in that, please let us know. It's about issues of more academics, not academic, but grant proposal, research proposal writing that could actually be of value to someone in practice of built environment. So thank you very much. Look forward to connect. And if you have a if you have an opportunity that you can share with the rest of the team, if you're organizing something, feel free to share it with us so we can share it to the bigger group. Otherwise, asante sana. Takoma, I hope I'm not missing anything. Asante sana na tuwatakie siku njema. Asante sana.
Asante sana, asante. Kwaheri.
Asante.